Emotional
What's going
damage.
What's going on, guys? Zimster here with another trading stock idea video. I'm gonna be doing these. I'm gonna try to do these most days around 3 right after the market closes, so we can talk about the different things that happen in the market, and so we can talk about what happened and where we see it going, and we'll talk about the news also. So one of my biggest things right now is just checking out like how SPY and the NASDAQ did today. So we can check SPY really quick. Now SPY correlates with S&P, and then QQQ correlates with the NASDAQ. So with this, let's take a look at SPY first. It looks like it's bouncing around. It got above this level, but it had a downward trend quite a bit here, just like a straight downward trend. But there was a huge drop here due to the news about Poland getting attacked by missiles, and 2 people died. So that's where I threw in the title, possibly war with Russia. I mean, that's a NATO ally, and as soon as Polish people start dying, that's when Americans are gonna start getting involved. So with that news, that caused a little stumble in the market, but it recovered pretty well. It recovered very well, especially for SPY. For the Qs, it was about the same thing. I mean, they kind of correlate, but not exactly. They're just a lot more. I mean, tech's just a huge part of the S&P. That's why it correlates, kind of. But for the most part, it doesn't directly correlate, kind of. So with that, what are we looking at? What happened today? You know, so we see that this happened due to the Polish attack. Now it started to recover, which is a good sign, which means people might be switching into defensive stocks right away, like sold off. Also, they reported the consumer debt for credit cards and real estate, and it was very high. Let's look at these numbers really quick. Credit card balances saw their biggest annual increase in more than 20 years in the third quarter, rising 15% from a year ago to reach $930 billion as Americans tried to manage a higher cost of living. And now that's according to the Federal Reserve. Now, that's not good. Total household debt also notched its largest nominal quarterly jump since 2007, rising by $351 billion, thanks in part to the $282 billion hike in mortgage balances in the third quarter. Yeah, this is all getting it's getting pretty tough on the consumer for sure. Now, how is this affecting you? You know, now if debt is rising, that means that banks are taking on more risk, and then we all know what that means. That means there's more fear in the markets, which could cause it could cause for us to start falling again in the market. With that much debt, it's not really good, and that much of an increase in a quarter, that's not really good. Now, how do we deal with this? How are we gonna go about trading with this becoming a new issue? We already kind of knew that, like with inflation, people were gonna have to start spending more. We knew that, but to cover that spending, people started using credit, and of course credit cards love that. You know, transaction fees, great. You know, credit cards are gonna do fine. What aren't gonna do fine is the financial institutes that back the money or the debt for the credit. Now, if banks start defaulting on this debt, we could run into another financial issue, a huge financial issue in America if people start defaulting on their mortgages, their credit cards, any type of loans. Now, where would you want to put your money if this is happening? Where would you want to? I mean, first off, pay off your debts. Of course, pay off your debts. That's first and foremost. Like, always pay off your debt first and then invest. I mean, the interest rates are like fucking crazy. They're well over 20% on credit cards. Even if you have good credit, you will get destroyed. So just pay off your debts. Always pay off your debts first. Pay the highest interest rate ones first, and then work your way down. Now, with that said, I actually would think that credit cards are going to have a really good quarter. If debt is that high, that means they saw a lot of transactions, which means they made a lot of money. So I'm going to bet that Visa, let's take a look. Let's take a look at Visa. Let's take a look. Now, Visa just did earnings. They actually did pretty well. They did very well. They did very well. And they're a little down for the year. Not as much as like most stocks, but they're holding pretty well. They actually jumped a lot today. They actually finished about even. But I bet you in the next month, next 3 months, that people are gonna start throwing a lot of money at these stocks. Visa, PayPal, all of them. Any type of credit transaction company, because they're the ones making the money. The banks are the ones that are actually going to be losing money if they have to default on any of those loans, or if people aren't going to buy up that debt. So now with that means that interest rates could go back up more. Now we see that interest rates right now on the 10-year government bonds are at 3.76 for now. But with this information, we could see this start going up. We could possibly. And then let's take a look at the dollar. The dollar actually was all over the place today. It had a huge drop before market open, and then it actually bounced all the way back up. So it went down to 105 and bounced back up to 106. So I had a nice, I had a nice rally here. The markets held pretty well for that happening. I mean, if you look, the dollar is like pretty much introvert of each other. It's an inverted fucking run of each other. It's crazy. You look at this and then you look at this, it's pretty much the same thing, just flipped upside down. So I do a lot of my trading off the dollar. I honestly do at this point. I feel like that's the main indicator nowadays because it's so high. Now, how can you figure out which way the dollar is gonna go, which way the market's gonna go? Now, looking at this from my stance on this, if I notice that it has a huge jump in the morning, and the same thing, like if the market shows a huge jump and the dollar shows a great fall, that means there is potential to an upside, but there also shows a huge potential to the downside. Now the reason for that is because it gets oversold. It's all about supply and demand. Now if the dollar drops super fast, that means that there's going to be some recovery. Not necessarily, like it's been dropping pretty steadily up here, but it had little recoveries each time. Like the dollar always has a little recovery to it. Now right here it had a huge recovery. I was expecting like a little one, but this actually went pretty far. It got all the way back up to 107. Now what I ended up doing was I played puts right in the beginning, because I saw this jump. These were my ranges from the day before. I played these ranges the day before. I played a call early in the morning, and then I sold it midday. And then today I saw it jump this much. I was like, okay, what should I be looking at? I was like, there should be a little bit of a sell-off. So I grabbed the put early, and then I just waited. I just waited to see, because I saw this downtrend. Like we weren't getting higher highs, we were getting lower lows. This area looked a little iffy. I wasn't sure what was happening, but then it started sliding, and then we had a huge fall. Now, once I saw this fall, I sold somewhere in here once it got towards my sell point. One thing you should always do is always have a buy and sell point. Like don't just buy stuff because you just think something's gonna happen. I bought this because I can tell that it was overbought, right? So that means that supply was low. And that means supply was low and people were going to start selling for a profit. Now people started selling for a profit, and what ended up happening was less and less people were buying up the selling. And then right here is when there was a huge sell-off due to the news. News drives this market so much. Like any big jump usually is some type of news, or it's a huge bear or bull play. It's one or the other. It's news or a huge bear or bull play, which usually is based off news. So I'm gonna just say news usually drives this a certain way very fast, like this. This is what this is right here. Now that we've seen this happen, what do we expect to happen tomorrow? We gotta think about the future. What's our game plan for tomorrow? Now I'm gonna keep these same levels because these are our ranges from Tuesday. I'm actually gonna keep these same levels. This was my sell range, this was my buy range for puts, or yeah, well, calls or puts. I kind of just use red and green. I flip them sometimes. It matters on what I want to play. I do flip on my calls and puts. I don't always just play puts. I don't always play calls, but matter on what the market's doing, you should have a strong indication if you're going to do calls or puts. Don't go into it not thinking about what you're going to play. Like, just pick one and figure out if you're going for the bottom or you're going for the top, because you don't want to get stuck in the middle. All right, so with this, we're back towards this level right here, this range. Now I want to see if tomorrow, if we sell off a little bit. If we do, I want to see how much, if it oversells. And if it oversells, I want to see what it does right in the morning. If it sells off some more, I might wait. I'd probably just wait and see until it settles and stops selling, and then I'll buy a call. But if it goes up and like we get a little bit of resistance at the top, that's when I'll jump into a put. So it really just matters on what your game plan is. Like, everyone has different ways of trading, and people are way more precise. I'm more of, I find certain levels that I like, that I see certain trading happening, certain consolidations. Like, you can see consolidation right here. Let's see, you see some consolidation right here. So like, I look for a lot of different points of like what happens at those points. Like, we sold off here, this point sold off a little bit but then came back. So it really just comes down to knowing the market. Like, if you watch this market every day, you're gonna know what might happen. So there's that. Now some of the stocks that I actually bought some stocks today with my profits. I bought Tilray. Tilray is a cannabis company out of Canada, and they sell weed all over the world. They do extracts, they do all of it. They do medical, they do adult use, they do all of, like, all the above. And I know they missed on earnings here a little bit, and they're not quite profitable. I think my thing is, in a recession, I think a lot more people are going to be smoking the weed. A lot more people are going to try to find ways to deal with stress. Maybe they don't want to smoke cigarettes, but they just want like buffalo weed. I see the revenue going up for cannabis majorly in a recession, majorly, because I don't think people want to smoke cigarettes. Cigarettes just fucking smell like they're, I mean, I'll smoke a cigarette if I'm like drunk and like just want to smoke something, I guess. Like, but when it comes to, you know, every person nowadays, a lot of people don't smoke anymore. Either they vape or they smoke weed. Now that weed's legal in a lot of states at this point, and in more states it's becoming legal. It was on the ballot in midterms for a few states, and then we also have the mayoral elections are coming up. So, well, next year. So there would be another chance for more cities and areas to legalize marijuana. So I'm seeing this, it's starting to get a nice uptrend. I'm noticing that the 50-day got crossed by the 20, so we're a little more bullish right now. I know we're a little red today, and my thing is, like, I like buying stocks when they're down, because I like buying stuff when they're cheap. If you believe enough in a stock, if it goes down, I just buy more. I don't sell, I just buy more, unless it's for sure like a losing stock, like not profitable. Balance sheet is horrible. It's horrible news. Like, they're going out of business, bankruptcy. Well, yeah, sell the fucking stock. Like, I get it. I'm not saying you gotta be diamond hands forever, but what I am saying is, if you believe in a stock and you, like, in long-term growth, just keep investing in it. Like, you hold on to your convictions. Like, stick to what you believe. Like, it's when you steer away from that, that's when you start fucking up. You'd start going off of what other people are doing, and you're just gonna fall. You're just gonna fall because you're not standing on your own feet. Build your own ideas. Build your own thoughts. You don't just have to listen to people like, oh, sell this at this point, and then buy this at this. Like, I mean, of course it's good to look at this information. It'll help you get an idea of what you should be doing. But it doesn't mean that you need to do what they're doing. Never do what another person is doing. Like, you really should always just be going off your own ideas. Even if you're not well educated on the stock market, just invest in what you believe in. You play video games, Activision, Blizzard, Tencent, like any of them. Like, you can just invest in things that you know. Now, and doing that for a while, you'll learn. If you lose, you'll learn. And if you win, you might not learn, but you're a winner at that point, so who cares? So if we keep going, right now I actually have to add, what else did I add to this? I added some more Google today on the drop. Yeah, Google was worth it. Yeah, I bought some more of this bad boy today. I think it hit like 87, yeah, 97. I bought one more at 97. I just buy little bits. Like, I don't buy a lot all at once. I wait and see what it does, and then if I like what it's doing, I'll buy more. If it drops, I'll buy more. It just matters on the stock. What else did I? Oh, another one I want to look at is MasterCard, because I'm telling you right now, these guys are gonna fucking boom pretty soon with remove drawing. I think MasterCard and Visa are gonna just fucking boom soon with these transactions, man. Marbles? Haha, good old marbles. Yeah, we can do marbles at the end. I don't give a shit. But for this one, let's see here. MasterCard, yeah, they're already starting to get kind of bullish here. If you can see here, like, it's already looking like it's starting to take off. I think MasterCard, Visa, any type of transaction credit card companies are gonna fucking boom. With this much debt accumulating for mortgages and credit cards, you're gonna see a huge, this next one, let's see what this was. I say they beat this. I say they almost make 6. I bet you they make almost 6 billion next quarter. That is a bet I'm willing to make right now. Hello, my friends. Well, hi, what's going on, man? I don't see it not happening. If there's that much debt, that means that there's that much more transactions, which means every transaction is a fee. Just think about it. just think about it. It's an easy tell. Now, I don't know if I'll buy any of this. One that I might look at would be like PayPal. PayPal is really far down there. Now, if PayPal can get into that market a little bit, we could see a little jump. Their revenue is definitely coming back. Yeah, they're definitely getting their revenue back, which is good. Let's see their financials. They still have a lot of liabilities, but we'll see. PayPal could be a good one. Square could be another good one. Anything that deals with transactions. Anything that deals with transactions is going to boom, I think, during the recession, because a lot of people are going to be using credit. A lot of people. Now, who's really going to hurt is financial institutes like banks. Those I would be iffy of. I don't really like investing in banks. After 2008, I'm just like, fuck banks. Like, I mean, of course I have to use a bank, but like, that's it. Like, as soon as they try to charge me interest rates, I just get another credit card that doesn't have interest. Like, I don't have any loyalty to banks because they have no loyalty to us at all. At all. Fuck banks. I fucking hate them. Let's go open our own bank. Let's fuck over people ourselves. And what else am I looking at here? Well, the 10-year actually slid a little bit today, which is kind of good to see. Kind of good. But I don't know if that's going to stay. I think this comes back up. What I'm fearing is we're going to see another downturn pretty soon, within probably by the end of the week. Probably Friday, we might see a huge downturn. Better than like all the news coming out. There's a lot more news coming out for, let's see here. What else is there? Oh, let's take a look. US calendar. We have retail sales coming out tomorrow. Import price index. Industrial production. Ooh, New York Fed talks tomorrow. That could be, there should be some good plays there. That's at 9:50 a.m. Another one, Michael Barr testifies on regulation at House Financial Services Committee. That could be good. And then Christopher Whaler speaks on economic outlook. That could be a good one too. That's right at the end of the market. We could see a nice little drop at the end tomorrow. Get your puts ready. And then Thursday, jobless claims. That's a big one. Building permits, housing starts, and then the Philadelphia Fed Manufacturing Index. There's a lot coming up. Now, and then Friday is leading economic indicators. That might do something. But tomorrow we'll definitely see some plays. Thursday we'll see some plays. Friday I'll probably sit out. There's not much going on there. Exiting home sales doesn't really give me anything to work off of. But today the biggest winners were communication services, so like Verizon, AT&T. Your second was tech. So tech definitely got some love today. And that could be because people are moving away from financial institutes. People might be moving their money from finance into tech. That would be my best guess. That would be my best guess, is that people are moving their money out of finance because interest rates are too high. So they're seeing less. They're seeing less demand. And then since the rates are so high, people are paying way more on their mortgages, which is leading to defaults, which means banks will get houses, but no one's buying houses. So how's that going to help them? They're going to have to start selling homes dirt fucking cheap. I say in the next year or two, you're going to see a lot of people foreclosing on their houses. Banks are going to have to sell them super cheap, and we're going to start seeing prices drop majorly in the housing market. That would be good. That'd be good for me. I would love to see that, so I can finally buy a house that's not fucking crazy expensive. So yeah, I'm gonna wait. I'm gonna wait a little bit. We'll see what happens. But yeah, my plays today was on the triple Qs. I played this drop. I made a little bit of money. I'm gonna invest that, and then tomorrow, what is this? Draw the line. I don't know here. Let's see here. I mean, that the Polish citizens or soldiers or whoever got killed, that's gonna be a big fucking deal. You're gonna hear about that for the next couple weeks, and what the US is gonna do about it. And this could ramp up. So now that Congress is gonna be split, this is gonna be interesting. But they could increase spending again, which would cause inflation to keep going up, which would be horrible for us, which would lead us further into debt, which again, fucking invest in any type of company that deals with transaction fees. So credit cards, but not the banks behind them, the actual credit cards, Visa, MasterCard, American Express, all those. All right, now what was I gonna say? Oh, for tomorrow, I'm keeping my key levels still. I'm keeping this range from like 290 to 288 ish, and then I have this down here that I'm looking at. I think we're gonna drop tomorrow. I think we're gonna see a drop early. We're gonna see a little drop, and then we might rally a little bit, and then we're gonna drop again. Is what I think is gonna happen. It's gonna be something like this. This is my opinion. We're gonna see some. We're gonna start lower, and then we're gonna see a little drop, a little something here, and a little something there, and then fucking drop. It's gonna be something like that, in my opinion. I could be completely wrong, but that's what I think is gonna happen between these levels. I think we're dropping back down into this range for right here. I don't think we're that bullish. What happened here? What I see happening here. This drop right here was definitely because of the news, but it was because people were switching out of certain stocks into other stocks. You can see that they started buying up some other shit here. So it's probably, I think this was people getting out of financials, because financials were down a little bit today. People were getting out of healthcare, basic materials, and finance today, and moving into communication services, technology, and consumer clinicals, and consumer defensives. So that's what I saw happening today. Now, year to date, the ones down the most is communication services, consumer clinicals, and technology. So we're starting to see a transition. Energy still fucking control. Energy was number 5 today, right under consumer defense. Yeah, energy, dude, guys, energy is not going anywhere. Energy is going to be booming for the next couple of years. So I want to see a little bit of a drop before I invest into any more energy. I have some, but I don't want to, I don't know. I don't think it's quite done yet, but I would like to see some of that transfer into some of these oversold S&P industries. I would like to see a little bit of transition, and I think we're going to start seeing that for next year. A lot of people are going to start transitioning these next 3 months for next year. And you're going to see a lot of drops, and then it'll bounce, drops, and then it'll bounce. It's just because fucking huge banks, hedge funds are shifting all their money into different indexes. So just keep an eye on that. I think some of your strong ones is going to definitely be technology, consumer clinicals, consumer defense, and energy. Basic materials will be up there, but not much. Not that high. I think basic materials will be up there, but healthcare, financials, industrials might do okay. They're pretty much going to do what basic materials does. Utilities ain't going to do shit. They might go up. I mean, utilities are only, utilities ain't going to do shit because it's so expensive for gas and electric, right? Well, electric's not that expensive yet, but gas is super expensive. So utilities are going to have more debt when they buy up a lot of gas to use for consumers. Real estate ain't gonna do shit. Real estate's gonna drop. So I think your biggest decliners are definitely gonna be real estate, utilities, financials, and healthcare. Healthcare is gonna be down, but not as much as the other ones. Your biggest ones are gonna be energy, consumer defense, technology. Communication services might be big too. Now, I already have stocks in most of those industries. I'm not buying any healthcare right now. Healthcare is kind of all over the place. It matters on what company you look at. They're all over the place. I think the biggest thing I want to start looking at is tech, honestly. Tech, energy, and consumer defense. I already have a bunch of basic materials that I'm holding for a while, so those are going to be the ones I'm going to start investing in more. So yeah. I don't know if there's any other news I want to talk about specifically. The US debt limit increases. Yep, we know that. Not needed this year. The fog of war. Yeah, looks like we just gotta wait out for tomorrow. But yeah, that's just my quick ideas for the market. What I think's gonna happen. Just protect yourself to the downside, guys. If you know how to play options, you know how to throw a put into the market when shit's rough, dude. Save yourself some money. Save yourself some money and make some money on the way down, and then use that money to buy up more. That's honestly the best thing you can do. Get defensive. I think we're about to get into a really bumpy road here in the next couple months, because if we do go to war and it's fucking winter time, that shit is never gonna end. It's definitely not gonna end in the winter. It's gonna be rough. All right, well, I'm gonna get out of here. Thank you guys for watching. I appreciate it. I am going to, what am I gonna go do? Maybe I'll go work out. Guys, stay healthy, eat healthy, exercise, and make money. Those should be your, that should be your goals right there.